Moving on to our second keynote of today, with the topic of management in procurement, proactive approaches to supply chain sustainability. Our speaker for this session is going to be Mr. Senthil Arasu, Associate Vice President Procurement, HDFC Life. At HDFC Life, Mr. Senthil brings over 15 years of expertise in strategic sourcing and supplier development, consistently delivering cost-effective procurement solutions. His approach emphasizes building long-term relationships with leading suppliers and implementing a strong governance model to drive enhanced supplier performance. I request Mr. Senthil to please join me on stage. A big round of applause for him, please. Thank you, everybody.
Slide changer. Good morning, everyone. So when I saw the first presentation, this is one of the top 3 agendas of the CPOs. We say this is the third agenda, that is the risk management is very, very important for the procurement practitioners as such and leaders. And the focus is more on risk aversion. This is slightly a theoretical topic, so I'll just try to be as crisp as possible. So it involves identifying and analyzing response for the risk factors. This is it is ongoing activity. It cannot be a one-off activity. Yeah, their audit comes in once in a year and put off the 4 or 5 or 10 points. Based on this, we keep changing the documentation kind of stuff. It's supposed to be ongoing activity. So in most of the organizations, risk management has a separate unit, and we may not have a governance particular person in part of procurement team. That may be, yes, few organizations will have it, and certain organizations will think about it in at least near future. It will start bringing in a governance guy which takes care of risks in the procurement team itself. One point. So I just give the risks in the procurement. Well, there is a little tricky business, right? So identifying the risk is one. Second, analyzing the risk. What are the factors that we can be able to analyze the risk? Risk assessment, action plan based on the assessment. Then how do you monitor? These are the 5 topics which we'll start. Identifying risk. There are 2 types factors that we can able to do it. One is micro, that handles within the organization. If there is a change management, if there is a organizational change in the buying patterns, these are the directions from the top management, policy changes. These are whenever there is a small changes, where we'll be able to see we need to analyze is there any risk factor over there. If you change one process to other, one direction to other one, if there is any changes. Second one, the macro factors, which everybody knows, environmental, technical, economical, geographical risk, those kind of stuff. Okay. Risk analysis is first point. Second point, so it can be qualitative, quantitative, or semi-quantitative, or combination of all methods. So when we talk about threats, we talk about the potential threats and opportunities. Qualitative research is something is judgmental, basically. It may not be exactly on numerical. It is more on judgmental and experience in the past. And we talk about quantitative, it's more on concepts, most on experiences, and we talk about the data to it. Or we can able to take care of all the 3 combinations put together. So what is the risk assessment? What are the risks? This is our first question. Second one, what are the concerns? Is it high, medium, or low? So what does high, medium, low means to us, to that particular organization? Every organization has a various levels of risk appetite. So what is that it comes in? Is this the level of risk is been acceptable to us? And last point, what last thought process supposed to be, is this likelihood of this risk can be repeated again? These are the risk assessments pointers that we need to start looking into it. And based on this, yes, what is the action plan that we derive? Is this the action plan that can we avoid the risk completely? Yes, if that is the option to avoid it, yes, we can do it. Or else can we transfer the risk to mitigating it to a third party? Is the insurance involved, whatever. Or risk of taking action to reduce the probability of risk, basically. Yeah. Last stage on the risk management process is to monitor this continuously. So when there is a process being implemented, changes being done, but still we need to start looking out for monitor the risk through the complete cycle. Then we start doing it. We don't know, every new day there is a lot of risk we will keep coming up through. So there is a new risk coming up. We need to be vigilant in saying that is this the possibility of risk coming through. Okay. How do you mitigate the risk in procurement? So it has I just put it up in 6 broader pointers. One is choice of a supplier. Second one is supplier relationship. Third one is legal requirement or legal risk. And accurate data, inaccurate data. So what are the data points that we usually maintain with us? Third one is ethical risk. Fifth one is ethical risk. Sixth one is vendor risk. I'll just touch upon the pointers of all the 6, few pointers. One, supplier selections. Okay. So our procurement professionals, one of the first point that we do is supplier selection, right? So what are the criteria that we actually do it in supplier selection? So we do pre-qualify the suppliers. Most of the organizations do as a pre-qualify the suppliers. Ad hoc suppliers may not be easily onboarded. So when we onboard the suppliers, are they reliable? We will look into various factors. One is financial aspects that we will look into it. Second one is we talk about how they bring in a cost efficiency to it, how to bring in value to organizations. Are they reliable? So are they working with various other companies? What are their performances? Those are the factors that we start looking for a supplier onboarding. Supplier selection process itself for any RFP processes. So if there is a supplier selection is wrong and poor quality of products, delivery timelines will be delayed, and that brings into a negative effect for the organization. So rigorous selection of the supplier is very, very important. That is one of the major pointers that procurement professionals will always look into it. So there is, yes, we identify a supplier, we onboard them, they do good for a period of 5 years or 3 years. Then we re-evaluate the processes. This is all time going. There may be option that where we select a supplier, then we terminate that supplier for various reasons. But the same supplier may not be deduping it and coming into the system. So deduping of suppliers, also we need to be vigilant in checking out the deduping of suppliers is coming up. So supplier relationship, yes. Knowing your supplier is very, very important. Know your customers is one of the stuffs where most of the financial industries people will look into it. Know your supplier is very, very important for procurement. As a professionals, we need to understand where they are, where they based out of, what are the business verticals they have, and what is the spends currently we work with them, and what is their turnover, what is the business that we are giving against it. For an example, there may be 200 crores turnover company, and are we giving 100 crores with them or 150 crores with them? Or is that any threshold that we keep it with these people? Are we categorizing them based on the turnover, categorizing them based on what is the business volume we are giving to them? All the discussions will start on onboarding and supplier relationship. Supplier relationship is not that only procurement comes up and closes the commercial, onboard the supplier, give it to the users, but there is a supplier engagement that certain point of time we keep missing it out, where it is not only with all the suppliers, we categorize them in A, B, C, D, whatever is the category that we want to do it, but at least for a period of 6 months, we need to start re-looking at the suppliers, having a discussion and taking their with them. So automations is one of the stuffs that currently everybody is doing it. We are automating it and getting the process simplified and getting the feedback from the suppliers. That is something that we need to look into it. Feedback from suppliers not only on so what we do it, we onboard them with certain aspects, saying that okay, 100 will be the turnover, 100 crores will be the benchmark number that will be giving the business for them, but we might be looking into 40, 50 CR. So we might have closed the commercials for with the certain volumes, and the volumes will be moving low. We would have done it on a payment cycle of 30 days, 40 days, 45 days, whatever the numbers are, but on actual goes beyond it. So these are the time when during the course of the contract, then we start having a discussion, we'll understand it. We'll able to make corrective close action. So when after 3 years period, when coming and saying that, okay, sir, your payment cycle is 30 days, but I get a payment time of 6 months or 3 months, 2 months, whatever the timelines are. When comes in, it automatically increases their cost. They will put on the interest rate on whatever it is there, then comes in. So this is word of mouth and growth spreads. So the cost of acquisition is going to be increased. So feedback from the supplier is always good. So whatever we ask for in scope of work might be doing beyond it, or may not be same supplier feedback along with the customer feedback. They may be doing lesser also. So engagement with the supplier is very, very important. Legal risk, yes, we do long-term contracts, and when you do long-term contracts, yes, they will adhere to all the terms and conditions, everything is fine. But how many times we were revisited the along with the legal terms and conditions of the contracts? So on 5 years back and now, MSA would have changed multiple factors would have got into it. So are we doing just amendment with this commercials and the scope, or we are doing it terms and conditions as well? So we would have done some scope technologically, basically we done this is the scope of work, this is SOW, SLA, stuff like that, we would have done it. We would have come out of the contract after 2 years. Technology is changing, requirement is also changing. When technology changes, requirement changes, on the functional level, they get changes. When the functional level there is a changes in the processes, this has been amended in the agreement. If it has not been amended in the agreement, if something goes wrong on the deliverables, then we'll be in a trouble. So the procurement guys need to get into a mitigation. Good contract management is very, very important. Okay, data accuracy, yes. SAP team people told me that data is something very, very important, and how good the data we have, how accurate data we have, we can able to do the analysis. And is this, we have 500 suppliers, out of 500 suppliers, what is the risk factor, or what is the concentration of business going to one supplier, what is the concentration of other people just on board and given a small number of things, they may be doing much better. So I'll give you some examples. So we have, say for an example, 10, 12 vendors doing one particular services, and deliverables will differ from supplier to supplier. Similarly, the commercials. But are we focused on one or top 3 people, and rest 7 people are looking at it? This is all the stuff. Second one is, based on the data, we can able to understand whether we have fallback options. Whether we have fallback option to the particular services, or we have fallback option for on BCP options as well. Okay. Then we talk about ethical risk. So it is it includes, okay, ethical risk is something very, very important for our as a professionals, for us, and it is a top-down approach basically. So procurement professionals will always have uphold the organizational policies, avoid conflict of interest, adhere to moral principles, maintain trust and integrity, and avoid taking advantage of others in the supply chain. Ethical assessment in each category and each spend. So this is something is part of ESG. Okay, so how do you identify ethical risk basically? So are we giving some specifications which is only one particular supplier can able to give it, will able to deliver it, or it is uniform so that there is a competition where you can able to bring in the competition, it should not be favorable for one particular supplier, it's supposed to be a uniform across the board. Okay, so when we are doing a supplier evaluations, are we changing the evaluation criteria based on the supplier preferences? So when we shortlist the suppliers or shortlist the people, vendors for any processes, by the time we have the scope, we need to have the criteria with us. So while during the negotiation, are we giving some useful informations where the supplier can able to give a better quote? So giving some information. So the other one is invoicing, overcharging, backdating is the other activities. Okay. What are the warning signs in ethical risk? Okay. This pertaining to us. Poor record keeping and data management is one. Files are missing it out. Resisting to audit is one of the pointers. Excessive secrecy, not allowing staff to deal with certain suppliers. So these are some red flags that we need to have it in mind. Okay, so managing ethical risk is a top-down approach from top management to bottom. It's a top-down approach. Code of ethics. Code of ethics should be signed out, very clearly spelled out by the organization, and it has to be signed out by all the people. Code of ethics has to be signed out by the suppliers. This is how it is, whistleblowers. All the stuff has to be part of the stuff. And supply evaluation, high-risk suppliers with the certain countries, certain specific countries, human rights abuse, where the supply is based on. Supply evaluations, again, we going back to supply evaluation basically. Duties, okay. So there is a duty variation. For example, if there one guy should not be a part of creator, approver, payable. So segregation of duty is very, very important so that that portion of black area can be avoided. So there are, what are the vendor risk? Vendor risk is when because it became more common, right? So when there is one is vendor is when the organization grows, they usually outsource it to the third party to reduce the total cost. Third party will always have information of financial data, customer information, and they are prone to cybersecurity risk. Okay, so these are 6 types of vendor risk that I jotted down. One is compliance risk, cybersecurity risk, financial risk, operational risk, reputational risk, and geographical risk. So I just touch upon all the pointers. So compliance risk, there are many laws and regulations keep changing it, and are we being compliant? Third party vendor is compliant to these laws can give us a very heavy fines. We have been every organization is being governed by every industry is governed by various. We are being governed by RDA, banks have been governed by RBI, TRA, and stuff like that. So there are, are the third party people are being compliant? That is one. Cybersecurity risk. Yes, digital is game right now, and cybersecurity risks are the softwares and the mitigation factors are in place. That is other one. Third one, financial risk. This is financial risk. Yes, or we yes, while we onboarding the suppliers, we usually see what is the turnover, what is the business they give, all the stuff like that. Are we re-looking it into year-on-year basis? So one. Second one, what is the out of their turnover, how much we are giving it? So it's a 40 crores, out of 40 crores, is 30 crores we are giving it? Or what is the increase year-on-year business? Is the 40 crores is stagnant? Or the 40 crores is being reduced to 30 crores? If there is a reduction, you need to start asking the question why. Is there any change in their management? Is there any change in their, they start losing business? If they start losing business, then we need to be very keen why they are starting losing business. So it typically into one is excessive cost for us, financial risk. Second one is able to shut shop. So if vendors shut down the shop, so if he just not looking into operational risk, is one of the pointers. If the vendors want to move out, or we have a BCP plan, or we have a BCP vendors, if so particular services we have, how many BCP partners we have, how many BCP locations we have, or we are able to mitigate the risk of the particular sourcing. Reputational risk, okay, this is a negative opinion if the product quality is low or the product services is low, and if there are data breaches, then it is organization data breach of customer information, then it will be huge reputation loss for the organization as well as for the department. Geographical list, you know it. So one of my speakers, the earlier speakers told me that currently 50 odd plus locations where we have a trouble here or something or other going around. So either are we buying a business, doing a business with those locations, or we have any other partners we can able to substitute the input. These are the 6 vendor risks and 5 types of ethical risk, which I have been able to put it up. So if you're able to have few pointers, take it up, and happy learning today. Thank you. Yes, sir.
Management risk, like succession plan is not there. It can create a problem. Or management diverts the funds to some other business, much more than what is required. Then there can be a financial risk. So these are the risks which also could have been covered.
Okay, so thank you. I'll just give a touch upon the point on the fund transfer perspective point of view. It is a financial risk, comes under financial risk, and in financial risk there are various factors that we can able to take it up. Yes, the point what has been taken up is financial risk, fund diversions, stuff comes with financial risk, audits, governance will be done, audits will be done, and those are the things which covers on the financial risk. Yes, safety risk is one of the stuffs. So, got a point.
One more, can I take?
Yes, sir.
Sir, you touched upon, like, for supplier selection, the first slide, like vendor risk assessment, right? So generally it is a process, it is a niche vendor, it takes around 3 to 4 months, 2 to 3 months, depending on the tier of that particular vendor. And you also touched upon supplier selection for that RFA process, like when you select. So how do you mitigate those timelines? Say, for example, there is a RFA coming in, you are also looking upon a supplier for that particular RFE, which is not yet onboarded. And where there is such a timelines in the RFE tender also has a timelines. So how do you mitigate? Second question, like in supplier relationship, you mentioned about automation. So maybe you can throw more points, like how automation in supplier selection, like what tools do you use for such automations in supplier selection? Relationship.
Okay. So I talk about the vendor selection process. Okay, so vendor selection process. So when we have a regular meeting with our stakeholders, we understand. One is, there are 2 types of getting information, whether we want to go to start a new process. Yes, we have a regular meeting with our stakeholders. Then we'll understand that, okay, what is the plan they're going to do. We will get involved at the planning stage itself. When you start evaluating at the planning stage, there will be enough timelines for the vendor selection then. As a procurement guy, professionals, we always meet salespersons, right? So various organizations, they know who is the category manager, and if you talk about a call center, we always have people coming out for call centers. So in fact, we have 15 call centers, but still I might have another 20 odd supply pool ready available. When it is not that at the time of the requirement we do the evaluation. When the evaluation has to be, a preliminary evaluation has to be done much before. Either you talk about the financial stand, their capabilities, those steps. The technical evaluation still can happen later. When the document is ready for the rolling out the RFP, that at that time technical evaluation can happen. But preliminary evaluation can be done by procurement on terms of, is this vendor worthy enough to start onboarding? We may not be able to creating a vendor code to onboard them, but still, these are the profile pool of vendors where we can able to go to market quickly. And in terms of automation, second question, we are talking about automation in supplier performance. Okay. So supply performance, yes, what the suppliers are more or less interested in, getting the payments on time, getting their TDS certificate and stuff like that on time. Is this automated at the back end? Yes, invoice been generated, auto-generated invoice, can it go through the systems, through whatever the system, the ERP system that we have, the invoice can be submitted over there. Is that portion that eliminates the loss of invoices, eliminates the time that somebody is keeping in his cupboard for a long period of time. It's that automation is being done from if it is against the purchase order, the invoice being tagged and uploaded. it automatically goes for the GRN, automatically goes, everything is being tracked, automatically goes for the approval, it goes for the payment cycle as per the timelines. So that's a small automation. From invoicing styles to is this automation all the people have? No, may not be. So this might increase the customer satisfaction level, customer performance level. Small stuffs at various levels where you can able to do it. And are we in a supplier relationship? So we would have working with 200, 300 suppliers, but still we go to market. When there is a requirement comes in, still we go to market. Are the existing supplier capability of giving into other services? For example, one vendor is there, a vendor who is keep on giving a business in printing activity. But all those vendors started giving it, diversifying their roles to various stuff, digitalization, cloud, and stuff like that. So document storage and various stuff. So are these vendors are capable enough to take it up? When you have a supplier relationship management, structured discussions with these guys, they will come and start pitching in. So we started having this. In our vendor database pool, okay, these are the supplier lists, they can able to 1, 2, 3, 4, 5. So that from the data we can able to pull it out and start giving it out.
Sir, can I take one more? Yeah.
Sorry, I can't hear you. Can you give a mic?
Hello, myself Chandrasekhar Mehta from Mumbai Metro Private Limited, and I have one question that how do you take care of the risk where there is a proprietary items and the vendors are very limited or say one only single vendor? That is one question. That risk is always there in the case of the new technologies like metro procurements and all that thing, because this is a proprietary type of technology and we have got a very limited scope for negotiations. So that is one risk. Second risk, I want to you please to highlight upon the customers, the products which are the customized product, where we are developing some products and we are developing some vendor that samples are getting approved and all that thing. But in that case, definitely the cost is also matters. So how do you take care of that kind of customized product? How do we tackle that issues? So should we go for another development of the new vendor, for another for customization and all that thing, because that will involve some time and also the approval of the samples and all. So please highlight.
So when you do for the customization products, so okay, so I'll just take an ERP for incidents, or ERP for system for incidents. When you have a ERP or any IT systems for incident, we talk about a thing. Then if you want to change, we bought the ERP and we are customizing it to our requirement. We spend huge money to the suppliers to make changes, and we spend huge man hours in doing this activity. So there is a team of people who will be doing it and working on this particular stuff to do it. Yes, how this can be avoided? When we're talking about the onboarding, this kind of OEMs, we will have a clear, vigilant check while onboarding. One. Second one is we also know what is the credibility in the market. When we talk about the credibility in the market, what is the market share, what are the customers they work on, and we have a reference check and see what is this they able to make changes or able to deliver it in a particular period of time. If you're not able to deliver it in a proper period of time, that's one of the main, this after onboarding, then will be a change again to make a change. That we'll realize it after 1 year. Or even if you're not able to realize it after 1 year, making it, going for another supplier will take few more years. That is will be locked in kind of situation. So when we onboard these kind of suppliers, at the first instant on the supplier evaluation perspective itself, we need to be clear on various aspects. Scoring has to be done on one, their longevity, their performance, their ability to make changes, ability to get things done quickly, what is the progress they do. So are the companies going for changes, they are buying out and all the stuff like that. So these are the small stuff which we do at initial stage before onboarding a supplier, which will able to mitigate this risk.
Good lead time also, And because of the fluctuation of currency, the geopolitical tensions, the policy changes, say for an example, this tariff war, geopolitical tension between countries, the current we saw Israel and Iran and other people. So just wanted to understand, one is the basic, yeah, definitely if there is a fluctuation issue, we can do hedging kind of thing, which will help us to mitigate the risk. But what are the other options or avenues other than this hedging, which will help us to, help us out to come out of the delay or with the plan B? Because in international orders, we cannot have more options because they are very particular orders and we can say the specialized product wherein we go out of a country. So in these cases, what will be the other options
Okay,
and
so
avenues?
hedging is one of the best options that we are able to think through. Second one is that we lock the price. So what I do is I lock a price of, with particular USD or particular euros with particular suppliers for that particular period of time. So
Yeah, just want to add one in that because sometimes there is some design related issues also which are particularly monopolized by them and we are stuck with those clauses in the contract. So in that case, if you can just throw on.
So contracting, whatever say, the contracting plays very, very important role. What are the risks, that factor that we can able to take it up with particular service. So there is a risk adherence factor that we can look into it, threshold that we can able to look into it. That's what the factor that we need to look into in the contracting stage itself. So that's hedging is one of the option, one of the best options what I can able to think of that other people can able to throw some light. I'm like to hear out on it. Hedge is one, and second one is that we lock the dollars pricing for at least a period of 1 year.
Thank you, sir.
Thank you. Thank you very much.
Thank you. Mr. Senthil, I request you to wait back, and I would like to call on stage Mr. Jagdish Agarwal to please felicitate Mr. Senthil. Could I have you on stage?